What's up, y'all? So in this video I want to talk about a credit card and a personal line of credit. And I'm doing this video before I go into any deeper videos so you can have a better understanding or an understanding period on the differences between a credit card and a personal line of credit, or just the general understanding of the different types of line of credit. So you typically have three types of line of credits, which are a credit card, then you have a personal line of credit, and then you have a home equity line of credit. So those are three types of line of credits. Those may be the only three types of line of credits. I'm not sure exactly, but I know generally those are the three types of line of credits: credit card, personal line of credit, and a home equity line of credits. And they're pretty similar. They have slight differences, and I'm going to go over some of those differences, at least between the credit card and personal line of credit, in this video. And I'm going over this because these are some things you can use in your daily life to help you manage your debt, whether that's to save interest or to pay things off faster. You can do things like that, or even just daily expenses. It can help you manage your cash flow, having cash available, right? Or you can also use these things for emergency situations, or to even invest, things like that. So let's get into it. So now the first thing I have is a card. We're comparing, do they have a physical card? So a credit card, it always has a card, as stated in the name, credit card. So yes, it always has a card. A personal line of credit, it may not have a card, right? So typically a personal line of credit, you'll have your account. Think of it as a second bank account that you can just pull funds from, but it may not have a card though. You may have to make a transfer to your personal bank account, right? To your personal bank account to be able to use those funds. Or I've heard you may even have to call up your bank or financial institution to get those funds or have access to those funds. I don't know how it is now. It may be different now, definitely, especially since things are advancing, so it may be different now. But I know that you used to have to call up your whoever gave you the personal line of credit, bank or financial institution, and have them make that transfer or something like that. So now the next one is revolving, and what this means, what I mean by this is basically to like do again. So the credit card, let's say your bank gave you, or the financial institution, they approve you, and they approve you for $5,000, and you can use that $5,000 to make purchases every month, and then as long as you pay that $5,000 back, you can use it again. So you can just keep repeating the same thing every month, using it, paying it back every month. That's what we mean by revolving. And so yes, both of these are revolving, and that's essentially the main thing for a line of credits. That's why they're all in that family. The credit card, personal line of credit, and home equity line of credit, that's pretty much why they're all in that family. This is revolving. That's what that really means. The line of credit, it pretty much means revolving. And so the next one would be convenience. The credit card is more convenient for daily purchases. You have a card available. That card is accepted by most businesses, stores, and things like that. So yeah, it's convenient for daily purchases. Personal line of credit, well, if it doesn't come with a card, then it's not that convenient. So you have to make that transfer into your personal bank account in order to be able to use those funds. So it's not as convenient. The interest rate. the interest rate is usually higher on a credit card. Credit card can go up to 22, 24%, things like that, right? Rates like that. Interest rate for a personal line of credit probably goes up maybe about 12, 15% at the most, something like that, but it's not going to be as high as a credit card. Then you have credit limit. The credit limits are typically the same. Yeah, they'll pretty much be around the same. You can get, $10,000, $20,000, things like that. They'll pretty much be around the same, close to the same. Unless you're talking about like a home equity line of credit where you have actual assets backing the line of credit, then you can get it up to the equity of the home, right? The value of the home. So things like that, it can be a little more for the home equity line of credit. Now, how interest is charged, the credit card is typically compounded. So if you spent something, if you made a purchase and you didn't make that, you didn't pay off the full amount on that purchase at the end of the month, or whenever that charge is due, that purchase is due, the payment is due, then that purchase is going to accrue interest on it. And so then when the next time comes around for you to pay it, that interest, the interest that they're going to charge is going to be on the previous principal and interest. Hopefully that makes sense. So it's just growing exponentially. If you never pay those balances off, then you're being charged interest on both the principal and the interest over time. The interest that you're accruing, that's also being charged interest on. Hopefully that makes sense. And then the personal line of credit is typically a simple, typically simple interest, and so you're only going to be charged on the principal amount and not the interest that's been accruing over time. It's just the principal that you owe. Now, the next one, we have variable or fixed interest. So credit cards, almost all of them are variable. They all can fluctuate. And then personal line of credit, most are variable, but you can get some fixed interest rates. Secure versus unsecured. So the credit card is unsecured. You're pretty sure that it's pretty much probably 100% of them are unsecured. So you don't have to put anything up to get you don't have to put any assets up or anything like that, any collateral to get the credit card. Personal line of credit is both. You can put assets up, so you can have either unsecured where you don't put any assets, any collateral up to get it, or you can put an asset, especially with a home equity line of credit. You're putting the equity in your home up as collateral. And then the next one we have is the approval. So we're comparing the difficulty of approval. Credit card is easier. You can go online right now and apply for a credit card. First of all, it's easier to get to. You can just go online, type something up, and easily find one. They also even offer you credit cards as well, so you don't even have to go looking. You don't even have to go searching. And then typically you only need your credit score. As long as they can get access to your Equifax, Experian, TransUnion account or whatnot, they usually just approve you. Not just approve you, depending on your credit score, of course. But as long as that is good and you just tell them your income and little stuff like that, little personal information, it's easier for you to get approved. You can get approved in seconds, minutes, With a personal line of credit, it's not as easy. So, other than just your credit score, they may want other information. So, income, personal information, and they may even want some documents and stuff like that. Credit cards, you don't really need any documents at all. Personal line of credit, they may want to see a document. I'm not sure. but I have read that it's difficult, more difficult to get a personal line of credit, to get approved for a personal line of credit. And then right here I have offered. Is it how much is it offered? You know, credit cards are usually offered more. A lot of banks and financial institutions have credit cards available, right? You can get them. You can get a credit card from most banks and financial institutions today. Really, the majority of them have them available. Personal line of credits, you won't find a lot of banks and financial institutions that have them. Most of the time, it's a local credit union. The big banks really don't have them like that. If you call up a Bank of America or Chase or something like that, they don't usually have them. Even like a Discover and American Express, things like that, financial institutions like that, they usually don't have them. They usually don't offer them. But your local credit union, they probably will have them available. Draw period. So the draw period will be, is there a deadline on you having those funds available? So credit card is no. So you can have a credit card your entire life and just keep using it, reusing it. And yeah, you can have it for your entire life. There may be, if a bank is going bankrupt or something like that, obviously then you can't use it. But for the most part, you can use it for your entire life. Line of credits, personal line of credits, or home equity line of credits, they're all draw periods. So you usually have access to those funds from 5 to 10 years. So once those 5 to 10 years is up, then you have to pay whatever you haven't paid back yet. You have to pay that back. There may be like a way that you can get on a plan that you can start making those payments back, but then it'll be kind of like a loan at that point, something like that. And then you have cash back and rewards. Credit cards, yes, they have cash back and rewards. I don't know about all of them, but the majority of them have cash back and rewards. Personal line of credit is no. It's just you just have access to the funds. And then is there a monthly payment? Yes, there's a monthly payment. There's a monthly payment almost on pretty much on any debt probably. So monthly payments, yes. For a credit card and a personal line of credit, yes. So both of them, I believe the monthly payment, you probably only have to pay the interest for the monthly payment. That's the minimum requirement, but of course I'm not telling you to do that. It's not a good way of using these debt tools or whatever you want to call them, but that's usually not a good way to go about it. And then the conclusion is a credit card is better for daily purchases, and that's due to if you have daily purchases, you just want to make daily purchases, and then you pay the full amount back every month, then it's usually better to use a credit card, so you can get points, cash back and rewards. So you just make your typical living purchases on it, and you just pay it back every month. You don't want to have too much debt sitting on the credit card because it's compounded. The interest is compounded, and the interest is higher. The interest is usually higher. And for the personal line of credit, this is better for large or unexpected purchases or to refinance debt. And this is because the interest is usually lower, and the interest is charged simple, so it's less interest overall. And so those are some differences between a credit card and personal line of credit. I wanted to bring this video to you guys because I'm about to go into some other videos, and I don't want you to be too confused. So I want you to have a full understanding or better understanding or foundation on these debt tools. But again, these things you can use for debt as debt tools. You can use them in your regular, just daily life when you're making expenses. You can use them to invest, or you can use them to just have that safety net. If something comes up, something unexpected comes up, you have cash available, right? And so that's pretty much it. I'm not a financial advisor. This is not financial advice. Hopefully you learned something from this. Please like, comment, and subscribe, and I'll see you guys in the next video.